Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. Our victim of the day is an old friend of mine, Ewan Downie. I've known him for many years. I call him a friend because he's made lots of money for me and my readers before, and so I'm always interested in what Ewan is up to. Most readers will know that he is the CEO of Premier Gold Mines, which is a company we have discussed but I don't yet own. And Ewan's here to try to change my mind. So Ewan, why don't you give us an overview for what Premier is up to, and then I'll get into my questions.
Premier, we're a TSX listed company who is currently operating one mine, and we have two mines under construction in Nevada with Barrick, a company I believe that has a very significant production growth profile. And with the growth in our production, particularly the production growth out of Nevada, we should see increased cash flows going forward, and I'd like to think our optionality will increase significantly with that.
Wow, that was an admirably brief statement. A growth company in the gold space, gold's up, so yay, here we are talking about good things. You're referring to South Arturo. You say two mines. You mean the phase one pit and the underground, but those are both part of the same project, the South Arturo project, or is there something else going on there that I'm not aware of?
No, it's the same project, but we were constructing an underground mine and an open pit. So it's two different operations.
Okay. Well, I don't want to get you in trouble with forward-looking statements, but this has got to be a big question on everybody's mind because the initial South Arturo pit vastly exceeded expectations. You look like a genius. You made this deal, and the thing, produced more gold at lower cost. It was a cash cow for you. So there's an expectation out there that the next phase of South Arturo will do the same. What can you tell us? Is that a realistic expectation? Is Barrick just being very conservative with their numbers? Do you expect it to over-deliver? Or should we tamp down those expectations?
Currently, we have, for Premier's account, about 500,000 ounces of reserves. However, we believe that is a fairly light number in terms of what will ultimately be there as we continue to drill out the project, and we are advancing the heap leach portion. So the profitability that you said came out of the phase two pit, 5.5 gram open pit, it's hard not to make a lot of money off that. The new pit that we're building, the phase one, the higher grade refractory material, will be more like 3.5 grams. So we're not expecting our all-in sustaining costs to be 450 like they were with phase two, but we expect it to be a low-cost operation, especially when you compare it to a mine like Mercedes. The El Nino underground mine, the grade of our reserves is about 10 grams per ton. And so 10 grams per ton in Nevada, 5 kilometers or 3.5 miles from the processing facility should be a good low-cost operation as well. So we do expect when the operation starts, which is expected to be this year, that we will be at that project a very low-cost producer on the scale of when you look at other comparables.
All right, well, we'll come back to Mercedes, but just to be clear, and also to be clear, it is a little confusing. We mined the phase two pit first because it was the lowest hanging fruit, and we're now going to mine the phase one. It's not backwards, it's just the names. He didn't mess up. Which one comes online first? Do we start seeing cash flow from the pit first or from the underground there in Nevada?
No, the underground, we're expecting to start processing. Actually, we just put out a release saying that we expect some processing this quarter, which is well ahead of our previous expectations. And the phase one open pit is expected to start up next year, probably in the second half of next year. So right now we're doing a fairly large pre-strip, and then we'll start processing the ore likely later next year. However, there's a fairly large potential heap leach component to the operation that is currently being stockpiled, pending a decision for ourselves and Barrick to make a decision. We hope to proceed with the heap leach, and if we do proceed with the heap leach, right now the expectation is probably commission the new facility, heap leach facility, in 21. So that would be actually a third development opportunity on the property. However, with the new Barrick JV, at Goldstrike, Barrick doesn't have a heap leach facility. Just across the border, their own Newmont does. And so not too far from our property where we're stockpiling heap leach material is an existing operating heap leach pad and facility, now operated by the Barrick JV, who is our partner at South Arturo. So I'm hoping that Barrick moves the heap leach forward by sending some to that heap leach pad, but so far no commitment out of them. Right now, it's a lot of development going in the property, and we also continue to advance the phase 3 pit, which we expect will be the next phase of open pit mining.
It's like the Energizer Bunny of projects there. It just keeps going and going. But so the first cash flow will be from El Nino, which may start this quarter but would ramp up next quarter.
That's the expectation. We actually, in our guidance for this year, called South Arturo material pre-production, because we are developing multiple zones, and prior to claiming official commercial production, we do expect there to be some processing. Right now, we're waiting to see if Barrick is planning to declare commercial production early at El Nino, and that decision will probably be made in the next couple of months.
Sure. And whether they do or not, if they're processing and you're getting paid, that will show up in your financials. So, one way or the other. Okay, let's talk about Mercedes that you brought up, Mercedes, if you will. Sorry, I can't help it. Let me ask you about that, because on the one hand, you bought this mine, and a lot of people asked at the time, gee, you're paying all this money. If it was so good, why would they be selling it? Is it really, are you getting a pig in a poke here? And then you started out and it looked great, you made a bunch of money, and then you ran into some trouble. What is the outlook for Mercedes now? Was it a good deal, and what happens next?
Yeah, I'd say it was a decent deal. When we acquired Mercedes, it was an operating mine. They mostly depleted the Mercedes veins. That's the Mercedes horizon itself, Lagunas and Barrancas, which were the main producers to date at the property. And Yamana had just started developing what is called the Diluvio and Lupita zones. And they also started developing a new deposit called Rey de Oro, which is a fairly small deposit, but locally high grade. And third, that was on the books when we acquired it, was the extension of the main Mercedes vein called the Marianas vein. And of those three, the real one that we were attracted to, why we bought the project, was Marianas. And we expect to start producing out of Marianas next year. So next year, we were hoping that Marianas is the same as the vein immediately on strike. It's the on-strike extension of what they'd been mining. It's expected to be higher grade than our current reserves. And when that comes into the fold and we have additional workings there to provide a lot of extra flexibility at the mine, we should see grades go up a bit and costs come down. So we've really always looked forward to Marianas being kind of the gold bucket at the end of the rainbow, so to speak. We were hoping to develop Marianas this year, but the ground conditions in the decline, we're extending from the Lagunas mine, a decline over to Marianas. We've encountered fairly trying ground conditions in several places as we trend through the faults. We're actually trending parallel with the main fault system, so ground conditions have been somewhat more difficult than expected. So we are probably about 6-8 months behind where we wanted to be in developing Marianas. And because of that, we've had to put more influence on Rey de Oro and Diluvio. And Diluvio is actually, that we developed, is the lowest grade of the three. So we're putting lower grade material through the mill than, well, we always knew we'd be taking this material, but we expected to be blending it with higher grade, which would have made everything look better. But without Marianas, we're using, I think we'll be up to 60% of ore this year come out of Diluvio, and the average grade of Diluvio is less than our current overall reserve grade. So that is causing some challenges for us this year. We're hoping to make the low end of our guidance at Mercedes. We had a bit of a rough second quarter that we announced a week ago, and but we still believe that longer term, the Marianas zone will help Mercedes perform much better than it is today.
All right. Well, it's certainly understandable that you need to be careful with that bad ground. The last thing you need is accidents or anybody getting hurt. So I commend you for taking it slow and doing the right thing there. But just to be clear, I do remember the plans for going into Diluvio when I was on the ground with your team on site. That was something we were excited to get into. And it seemed like when you did, the geometry wasn't exactly what you expected.
Exactly.
So that was a setback. But is that all behind us now? That's sorted out and we're working and on the lower end of your guidance? I guess the bottom line is, does Mercedes still deliver operational profitability?
Yeah, it's still, we're just finalizing our quarterly numbers. They'll be coming out, I believe, the week after next. I believe even though we had a quarter where we made less gold than was in our plan and added a bit of development that wasn't expected, I do believe it's continuing to show operational profit. So it's not losing money.
Yeah, and I stress operational because I understand you've got a lot of projects, a lot of pokers in the fire, you're spending money in other places. So, I mean, I'm not expecting Mercedes to pay for everything you're doing across multiple countries. I get
Neither
that.
do we.
But we do, if this thing was worth buying, it should be able to make money one way or the other.
Yeah.
And that's what we'd like to see. So we'll look forward to those financial results soon. Speaking of projects in other countries, it has come up from a number of readers that it seems like Centerra is dragging its feet on what used to be hard rock, but used to be a number of different things, TransCanada, Greenstone, whatever we want to call it. What can you tell us about how excited they are to move that forward? Will they, are we going to build this finally, and what's up with that project?
Well, I think maybe the readers are interpreting Centerra wrong. I know they don't always talk about it in the highest light. We're not sure why they. I think it's because some people in their team would like to build chemists first, so they try to make chemists be the flagship of the next operations over hard rock or greenstone. However, this year is the biggest spend on the property that Centerra has put into it since they came in as a partner. We just got the provincial approval for the project. So we got federal approval in December of 18, and in the second quarter of this year, we got provincial approvals. So until we have those approvals, we can't actually move the project towards permitting. So you can't really do anything until you have those approvals. So it's not Centerra dragging their feet, maybe it's the government dragging their feet. So with those approvals, which were major milestones in place, now we're doing a lot of the detailed engineering and preparing the project for a go, no-go decision that we expect to make probably at the end of this year. And if all goes well, next summer or next spring, we'll be breaking ground at Hard Rock. And Hard Rock, even though the market looks at it as, it's being compared to Rainy River, I'd say it's more like a Canadian Malarctic. Which worked out well, obviously. Cisco got a good dollar for that project at the end of the day. But with some of the failures New Gold had at Rainy River, even some analysts were saying, it's like Rainy River, but it's a totally different project. And so it's been moving along to try to get it to
Actually,
a production.
let me jump in on that. I would have never made that comparison. I don't know who did. But I remember there were continuity issues with Rainy River from the get-go. I mean, from the beginning. And Brent Cook, my esteemed colleague, was saying, I don't think that'll ever work. And there were questions about New Gold when they took that on. A completely different scenario. Continuity has never been the issue at Hard Rock. The consistency of drill results you guys had there was outstanding.
Yeah, and I think that, and we have released this year that we've done a lot of work since our feasibility study in 2016, including a fair amount of drilling in the open pit where the roughly 4.5 million ounce open pit is. And there'll be some changes to our resource, and we're actually expecting the grades to go up based on the work we've done. As you said, spectacular drill results. And when our final resource reserve came out, I thought it was ultra conservative. As you said, spectacular numbers came out of the drilling. And when I saw our resource, I said, where did the grade go? And so we did a lot of work since then in drilling off the entire pit at basically production scale level. And that has demonstrated the continuity that we felt was better than the previous model, and demonstrated that, yes, there is a lot of good grade material in this pit that was probably being overly cut, because we were not only doing a top cut on our assays, we were also doing a very restrictive search ellipse on high grade intervals. So essentially double cutting all of our high grade intercepts. And there's going to be some loosening on our model based on 10 by 10 or 10 by 20 drilling in the open pit that's being completed. We've essentially drilled off at production scale the first 5 years of production now, and it's a good deposit. Much like you talked about continuity issues, Hard Rock's a mine that produced multi-million ounces of gold in the past from underground, just like Canadian Malartic did with the Cisco. And like at Canadian Malartic, we have a lot of porphyries, interconnected rock units that cause these big blowouts of low grade, and they were mining the high grade. So essentially, our deposit, our model that we'll be mining in the pit is just following the old workings. It's mining the low grade that was well below the cutoff grade from the underground mine that closed down in the 60s. So almost identical plan that Cisco did, and now we're looking to execute later this year. And the gold price has sure helped us in our thinking about Hard Rock. When you're talking, our feasibility study was done at 1250 gold, 1700, 1725 Canadian. In Canadian dollars, gold just hit an all-time high. So I'm starting to think, how could we not do it? It's for our company. It would be our longest life mine in terms of reserves. It would be our biggest cash flow generator, because on a per ounce basis, it would be our biggest mine. So for Premier, it's a very important part of our future. And I think while people are saying, oh, those big projects are a problem at lower gold prices, how do you build them? I think the optionality should come into our stock now when people start saying, well, for a near permitted project on a highway in Canada, there's one.
Well, and with a major partner. I mean, well, I don't know, mid-tier part. I mean, Centerra, it's not like your little junior have to build this all by yourself. You have an experienced mine builder operator there who would very happily, I think, have a flagship asset outside of Kyrgyzstan.
Yeah, well, they did buy Mount Milligan in BC, so now they have a Canadian one, and I'm pretty sure they'd like to have two.
All right, so we'll agree on that one. All right, so but just to cap that, when would we see a new resource reserve statement? Would that be part of an updated feasibility? Would that be released separately, and when might that happen?
We're expecting to release a new resource, not reserve, a new resource likely in the current quarter. And then we will be using that new resource based on all the work we've done, the re-engineering, to do a new economic model, whether that will be an official feasibility study, because we already have one, or do we re-release it with the new numbers? We haven't really talked about that yet, but based on that new economic model that our third-party consultant G Mining is doing, we expect to sit down, the partners, at the end of this year, and look at the markets, look at the gold price. And we're currently working with Endeavour Financial on putting together various financing packages to facilitate building the mine. And at the end of the year, most things should be in place for us to sit down and say, okay, guys, are we in the kind of mood that we're going to do this? And then we'd start ordering long lead time items and expect to be breaking ground for the office facilities, everything else in the early spring. So I'd say we could be less than 12 months away from that project being a reality. And I think you'll probably remember that I started trying to get that project out of Barrick in 2000, was finally able to get it in 2008. We drilled off the reserve up until about 2013, or the resource. And then since then have moved towards the economic parts. And if we break ground next year, that would be, for me, a big feather in my cap, because since I started trying to buy it, it would have been 20 years of my life of trying to get that project off the ground. So it'd be nice to see it right from an idea I had in Northwestern Ontario to actually something that's going to create jobs and wealth for our shareholders.
Very good. Well, I wish you luck on that. We'd definitely be tracking that. Meanwhile, we have other projects though that seem to be on the back burner. You know, what happened to Hasaga? We had a big bulk tonnage resource looking to shape up there. That seemed interesting. And then you started hitting these deeper, higher grade intercepts that I thought were quite exciting. I mean, it kind of looked like maybe another little Helen Zone analog, if you will, hiding underneath
Yeah,
there. And it
yeah,
just seems to have slipped off the radar. What happened?
I wouldn't say it's off the radar. It's, as you know, we have a lot of projects. We actually have 8 active properties in our portfolio, and with the declining income, with the shutdown of phase 2,
The
and
planned
the
declining income, we should say.
what's that?
I'm giving you a freebie there. I'm saying the planned declining.
Yeah, planned declining income because phase 2 ran out of ore, and then we went. Now we're in construction. There's a lot of money going into building El Nino and the phase 1 pit. And we had to sit down and say, well, we don't have enough money to do everything, and prioritize production first, near term development second, and our longer term projects are going to have to take a back burner. So Hasaga, unfortunately, got put a bit on the back burner. And our last hole was, what was it? I think the true width was near 20 or over 20 meters at 5 point something grams, higher grade than Timmins West or Gold X, and it's a similar deposit to that. So it's wide open, and we continue to view it as something that, if it gets much bigger, will be part of our future mine development. But this year, we just couldn't justify spending money on everything. So we said some things are
So
going to
there
have
was
to
no
take a.
Achilles heel discovered, no fatal flaw. There's nothing wrong with it. It just didn't make it in the budget priorities. Is that?
Yeah, just didn't make in the budget priorities this year. And next year, we're starting to think about next year. If we start development at Hard Rock, obviously there's a lot of money going out, but I think next year there's a good chance we'd have at least a small budget to continue stepping out and try to expand that resource. But we, in the background, we are doing all the early required environmental sampling, so water samples, ground samples, etc. Getting all the background info. You need 2 or 3 years before you start submitting submissions for projects. So we continue to get the property ready for future development, just have stopped the drill bit. So that's why it makes a bit less noise.
All right, one that also I haven't heard from for a long time, and I don't even see it on your website anymore, was one called PQ North, where we did poke a few holes and, interesting, but I don't remember any decision to just drop it, or what happened. Do you even have it anymore, or?
No, PQ was as part of the Hasaga deal. We gave PQ North to Gold Corp.
Oh, okay. All right.
So it was a deal to get PQ and Red Lake, or get Hasaga and Red Lake. Part of the transaction was we gave them our property up at Musselwhite. We
All
have
right,
no
I spaced
resources,
on that.
no reserves there. We have a royalty in it, but the mine's still a long way from our property, and we felt Hasaga had better upside than PQ North. So Gold Corp like PQ North, we like Hasaga. We're able to pull off a deal.
Yeah, okay. Now I am remembering that now. So, okay, good, good. I'm glad to hear that. And I, given what you've been able to dig up there at Hasaga, it seems like a well done deal. So, and similarly though on deals, you jiggered a deal, and I forgot what you exchanged for it with Gold Corp at the Rayhill, what is now Rayhill Bonanza. It used to be the Red Lake JV there with them, and that was similar. You got something you wanted, you gave them 5% more. But that thoroughly puts them in the driver's seat there. And I remember that was exciting too. There was that underground tunnel being drifted, I guess, to connect the areas. We're going to drill from there. You had some very high grade results, and it just seems like that's gone radio silent. Is that just because Gold Corp is now being consumed and that's very low on their priorities, or is there a reason to expect any more news?
I think that property, they acquired the Bruce Channel deposit at Gold Eagle, and they, with the tram, went to develop the Gold Eagle deposit, or Bruce Channel, which they now call Koshner. And when they got underground, I think their what they thought were going to be the reserves were much less, and they've been trying to make that. I don't know if they've officially declared commercial production yet at Koshner. So trying to make Koshner work has been their priority. And until Koshner, works, probably our property's not going to work. So it's being put on the back burner waiting for them to finish. And again, it makes it easier for us because, as I said, we've got a lot of money going out the door. But the 5% that we traded there was part of the deal to get South Arturo. So we got what is now the last piece not owned by the Barrick Nevada JV in the Carlin Trend, or the North Carlin, that isn't owned by the JV, is now Premier's is really your only exposure. And Nevada, for me, for a long time, was kind of the place I wanted to move Premier to. It's just hard to find really prospective projects when Barrick and Newmont own a lot of the really good ground. And we've also done some more transactions down there since then. And after we got Arturo, where we swapped interest as part of the whole Cove thing that we did with Barrick, we got their Rye property, which we view as being a highly prospective, high-grade epithermal vein system that we'll be drilling here in the current quarter. We'll start drilling.
Okay, we'll come back to Nevada in a second. But just to summarize what's going on in Red Lake, they have their own trouble, so this isn't their priority. But is there also any aspect to the Newmont takeover of, does that change anything, or is it just, they're sorting out their stuff first and then this may come back up again?
Yeah, I think they're sorting out their project, and it's giving us a bit of a breather on our balance sheet as well at a time where we sort of need it. It's really nice to have a lot of options in your portfolio, and some people call it confusing, but I call it the way we're going to build a real long-term mining company is in a portfolio, not one project. So we're building that company, and right now there's a lot of development dollars going elsewhere. So any project that's not ranked 1 or 2 we have to scratch our heads a lot before we put dollars into it.
Sure. And so it could be blessing in disguise here. If you wouldn't have much money to spend there anyway, better for them to put it on the back burner for now and then come back to it when you have more funds to put in there. Okay, so let's talk about Nevada then. I've long had a soft spot in my heart for the Cove McCoy project because I speculated on it early, and it delivered, right? The Helen Zone, you guys kept finding more. You had this hypothesis of connecting the dots. That's worked out, I think, spectacularly. But it's also, kind of strange. You optioned the area around there, and one wonders if Barrick was so interested, why didn't they just take the whole thing? And if they're not interested, is there something they know about the heart of Cove McCoy that we should know that says there's an issue there or a problem to be worked out?
No, we feel that's, I wouldn't call it our number 1 project, but next to Hard Rock is probably right up there with Arturo as ranking probably number 2 in our portfolio, particularly because of grade. And given that at South Arturo, Barrick's the operator, so we're a bit in Barrick's hand. At Hard Rock, we have a partner, so it's a joint decision. The only project currently we drive is Mercedes, and we'd really like to have a second one that we kind of control our own destiny. So we wanted to keep the main deposit, and if Barrick wanted to come in as a partner there, we wanted a fairly large upfront payment and wanted them to pay for upside because the deposit is open, and they weren't willing to write a check like we did, but said, well, we'll help you explore the area because we're moving that project now into our development pipeline more than exploration. And so work with Barrick. We've had some good intercepts that will be followed up in the future. For Barrick, now that they've got this big Nevada JV, and they have to figure out where that JV fits within their bigger JV. But for us, we're putting in the power line. We've got the permits to go underground, so we're readying it for Q3, Q4, starting up the underground development there. May hold off. I think one thing that we get a bit discounted on that property for is the fact that it is refractory, but it is 11 plus grams. Not too many of those in the world that are over 1.5 million ounces like we have at Cove. But we don't have a processing facility, and we don't have a processing arrangement. So for us to, I think, get full value for that project, I think it's probably going to take us finding a facility to put the material in and announcing, hey, we've got an agreement to process our material, so that it's not viewed as, well, nice deposit. How are you going to get the gold out?
Well, but just to be clear, you're not going underground to mine. You're going underground to explore.
Yeah, the deposit is open under the pit, and because of the old pit where it's situated, we can't drill any further extensions. So we've got approximately in all categories about 1.6 million ounces, but it's open under the pit, and we believe it will be, at least in resources, over 2 million ounces longer term. So we have to do that from an underground platform. And also, most of our resource at Cove is inferred. And the deposit's down at depths of 600 to 800 meters below surface, or 500 to 800 meters below surface. And to do sufficient drilling to bring the deposit up into the indicated category to do a full feasibility, we have to do a fair amount of infill drilling. And so we put the exercise together. This is how many holes we're going to have to drill from surface. And it was a big number in terms of dollars. I think it was close to 25 million to do the drill program from surface. And so, well, that's a big undertaking. What if we put in the decline, which is permitted, and drilled from underground? How much does that cost? And actually costs, we estimate, about $5 to $6 million less to put in the ramp and drill from the ramp. And from the ramp, you'll get a lot more precision on your drilling. And ultimately, when you're done drilling it off and you do the feasibility study, we should be at or within tens of meters of the ore body, so that a startup would be much quicker as well.
You shorten the production time frame because you've already got your decline in if that decision comes. And so I've got two questions about this, two more questions. One is, has the antenna discovery, which is really interesting in the JV area, changed the attitude of the Barrick guys and their interest in that overall land package? And the other one is the Newmont Barrick JV changing anything? So my first question is, how are your partners, and has their interest in the overall project changed as a result of that discovery? And then the other question about the bigger JV.
Yeah, I'm sure their interest in the overall project and the JV has to change. One, before they really do anything they just formed the JV. It's now formal. So they formalized it, and we work with Barrick regularly, so we know they're doing probably more than most people in the background. And we know that now the exercise is, well, we've got all these Newmont deposits, our deposits, we've got all these processing facilities to fill. How do we do this? And I'm sure they're looking at the Newmont ground saying, well, what is here that needs exploration? So it's going to have to compete with a much broader property package than it used to within Barrick, because Newmont had more land holdings than Barrick. So, and all of that land holdings, they own 100%, where they're earning an interest in ours. So I would think that it may put our project a little lower in their priority in Barrick than it was previously. But that doesn't bother us because we're advancing the deposit, and we're hoping that in all this, that they come to us and say, yeah, we have capacity for your ore. And then we can say, well, now we can go ahead with our project. As so long as the terms to process it are favorable enough that we can still make money.
Sure. Well, that always helps when you don't have to build a plant if there's one nearby. Otherwise, it's a big enough deposit that if the margins are there. I mean, I'm a little surprised to hear you say that people have said, well, how are you going to process that? Because at the end of the day, I mean, it's great if there's processing available that you can use. But if a deposit is big enough and the margin is there, well, you build a plant. I mean, that's what people do.
Yeah, I guess longer term, that's what we'd have to do. Preference would be to use one of the Nevada Gold Joint Ventures facilities so that we don't have to put up huge capital. And it's just a matter of negotiating it. And I'd like to think that we now have a pretty good relationship with Barrick. Got a front seat at the table. If we want to talk about something, they pick up the phone and say, hey, what do you want to do? And at least listen to what we want. So we've already started that, run it by them, say, no, you guys it'll take a while before you know what exactly you're doing with all these facilities, but start thinking about our project and how it might fit into all this. Um, and they've been open to open up that dialogue already. So that's a positive.
Another arm waving question then is, when this first got going, I remember, you bought a couple or optioned or you acquired a number of different projects, all in the shadow of a head frame. And it seemed like the whole idea of Premier at the time was that it was a takeover target. Like you had built yourself as a takeover target. We're going to discover, multi-million ounces right next door to somebody. It'll be so appealing they have to take us over. And you had several shots at that. Meanwhile, the market melted down. History happens. It doesn't seem like that's the goal anymore. Do you still see, or do you see Premier as a takeover end game, or is it really now we're building a mining company and we're going to have multiple partners and we're just going and growing and we have no interest in being taken over anymore?
I never say never, I guess is a good point, but we Premier was in 2015, which is when we started acquiring these development stage or producing assets. We bought Arturo in 15 and Mercedes in late 16. We were getting close to being a 10-year-old company, and the company was formed. Yes, we're going to make these discoveries. We drilled off multi-million ounces at Hard Rock. I thought for sure we were going to disappear over that discovery and that delineation of that open pit deposit. It didn't happen. And once you become a 9 looking at a 10-year-old exploration company with no cash inflow, and you continue every year sell shares to keep the doors open, start to think, well, if we don't get taken over, eventually we're going to be one of those rollback companies that starts over. And said, if we're going to ensure the long-term success of Premier and make sure that hopefully I give all my shares to my kids one day, that the company is going 10, 20 years from now, we have to become a mining company and actually generate income. So we started changing our board, our management to facilitate the change, and not many small companies successfully transition from explorer to producer. And we'd like to think, other than a few challenges we've had in a couple of quarters at Mercedes, we've done a pretty good job of it. And we've got a growth pipeline unlike you'll find in any company our size. And I'm quite excited about our future. And if you look at insider trading, I continue to buy stock in the open market, and that will continue.
I'll come back to that. That's my skin in the game question, which is important to me. But what you said really triggers something. My mentors, my teachers in this space, Doug, Rick, they all told me that a leopard can't change its spots, and it is actually not a good thing, but a bad thing, and possibly a reason to sell when a company decides to switch from exploration to production. Very few people make that transition. But you didn't just build a mine from scratch. Oh, we like our own discovery. I mean, you bought Mercedes, an operating mine. You bought into the South Arturo JV, where Barrick, one of the biggest, most experienced miners in the world, was doing all the heavy lifting and building the mine and operating it. So you kind of eased your way into cash flow without, that. But you have touched on something important. That is, you changed your board, you changed your staff. You're not just an explorer with cash flow. You have become a mining company now.
Yeah, I'd say before we brought Ebe Shirkus in as our chairman, we had one mining engineer on our board, mostly exploration guys, a couple of lawyers. Now, 4 out of 7 are mining engineers on our board. So complete transformation of the board. If you look back 8 years ago, you'll see I think 2 or 3 common names to who are there now. So we did make those changes, brought in guys like Brent Christoph and Tim George in Nevada to work with us on the operations side. A lot of people you don't see on our website. We built a pretty good engineering team, built up our financial ability in our accounting department. So we've completely transformed the company. And maybe a lot of companies are explorers who find a good deposit, say, well, a bunch of us exploration guys who really, that's my background, we're going to go build a mine, and that probably doesn't work. So we purposefully changed most of our team to make sure we would be successful at it, and brought in a lot of guys. Like the first big change we made is when we changed our chairman to bring in Ebe Shurkis, who helped build our strategy. Ebe was important in building Agnico, so we didn't go after a guy who maybe he was a junior engineer at a mine. We went after people who have built mining companies and said, how did you do it? We want to do it. And I think that's why our strategy is maybe different than some of these guys, why Doug or Rick might say, it's a bad idea for people to do that.
Very good. Okay. All right. Well, since you brought up the skin in the game question, it's all fine to have free options for being on the board or whatever, but how much of your own money have you put into this? You know, it's something that I always promise my readers. You know, I'm not going to ask you or suggest that you do anything that I'm not willing to risk my own money on. So how much skin do you have in the game here at Premier?
If I remember correctly, when we spun Premier out of Wolf Den back in 2006, I owned approximately 1.6 million shares. Today, I own 4.2 something. And all of those shares I bought. Most of those shares I bought. There's been a few through RSUs, et cetera, but for the most part, most of that's been the market. I bought shares at over $6 a share. When we were coming down from our all-time highs, I was buying. Last year, I put the equivalent of my total salary before tax into buying our stock. So I'm definitely putting my money where my mouth is. And I look at our company and other companies around who are drilling a single property, and their market caps is bigger than ours. I say, well, that's really expensive. We're really cheap. I'm buying our stock.
Very good. Okay, well, I appreciate you sitting still to answer some obnoxious questions from the due diligence guy. I appreciate it, and I wish you every luck with everything, and keep me posted. I can't promise what I will do myself, but I do like the story, and I just think it's great. I want to see you build more mines.
Well, that's our goal, and this year you'll see at least one startup.
Great. Okay, have a great one.
Thank you, Louis.